Good morning. It's Tuesday, February 25th, about 6 a.m. Central Time. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's get you ready for the trading day ahead. Look at precious metals, futures, and commodity markets. But first, I want to start off with cryptocurrencies. Looking at Bitcoin here, down about $5,000 at $89,130. The low in the overnight session, just under $87,000 at $86,695. High in the overnight session was where it closed the day before at $92,765. We also have Ethereum down about 8%, which is down $214 at $24.27. So Bitcoin dropped below 90,000, lowest level since November. The cryptocurrency's fallen roughly about 20% since Trump's inauguration in January, and it's the broader macro uncertainty here and the concerns about inflation that are really weighing in on the decline. When you get deflationary type trading data here, that does not bode well and does not backtest well for Bitcoin whatsoever and cryptocurrencies. You also have some recent industry specific setbacks with cryptocurrencies, with the major hack on the exchange by Bybit, the meme coin scandals that we've seen, and you just have like soured sentiment here and just undermine confidence right now in the crypto market. Now shifting over to equities, some of that spillover has taken place because of the equity markets recently selling off. You have the Trump team that are taking a tough stance on Biden's chip controls over China. The Trump administration is planning its effort to limit China's technological advancements, including tougher semiconductor curbs, really pressuring the allies to escalate those restrictions on China's chip industry as well. So the administration did meet with Japan and Dutch counterparts to restrict maintenance of semiconductor gear here in China and discussing some sanctions specifically on Chinese companies and further chip exports to China. So the U.S. futures, they dropped below that 6,000 mark. We're trading at 59.97, down about 3 points right now, 20 points off the lowest level we've seen in the overnight session. You also have the NASDAQ under significant pressure and just red across the screen here. So the VIX, the measure of volatility here, touched its highest level this year and just below 20, indicating a lot of uncertainty in the markets. When you get that uptick in the VIX, and the bottom end of the trading range in the VIX is still in the investable bucket where things are just kind of smooth sailing. But then you get that upper end probable range touching into these higher levels. What you do is you get a lot of choppy trading here, and that's when investors get chopped up trying to day trade these equity markets. So what you want to do is you want to shift your strategy a bit, take it down to look at some of those micro contracts. That way you can widen out some of your stop losses there. Remember, they do have minis, micros, things like that. Now shifting our attention to the metals markets, under a bit of pressure here today. Now silver, another one, does not perform well in deflationary type environments when things start to go down. That's when you get asset classes that are inflation asset classes coming down as well, and then you get growth declining as well. It tends to work a lot better in a stagflation environment, and the problem is we've been kind of shifting out of these two different economic regimes. Remember, one of my old mentors used to tell me, hey man, I want silver to go to $50 an ounce. And he's like, Phil, you got to trade the market that you're in, not the market that you want. And the guy would literally yell this silver to me with a half a thing can of chew in his mouth. So that's getting off the topic here, but realistically, like, we all want to see silver go up to these higher levels. We all want to see the gold market go up over $3,000 an ounce, obviously, unless you're short. But the reality is that certain changes in the tone of the market because of the tariffs, because of the economic regimes, because of the data that comes out that sours these markets, that's when you're going to see problems occur in some of these markets, and that's really where you want to manage your position. Now, for the silver market, that March contract is set to expire, so people are going to have to start rolling over that contract, and really, we'll get ahead of it today, tomorrow, and start rolling over from that March to the May contract. And some people that have bought that March contract at the 29 levels, in the mid 29s, where we had that double bottom in December, what they'll do is they'll just exit the position and wait for a more favorable entry on the May contract. And so you're not going to get that rollover per se going from one contract to the other. Now looking at the I don't know if I touched on the gold market, kind of went off in a tangent there, but 29.70 was your high, 29.43.40 was your low, 29.52 last. Gold's really been in this trading range, about 29.71 on the upside. A lot of people working with us, working those limit orders at a couple of those pocket resistance points, 29.64, 29.71. A lot of people looking to add to those positions back on, dip below 29.50, dip below 29.40, just right around that 29.39 level is where they've been kind of playing these ranges, and we outlined those ranges in the Metals Edge report. That silver contract, again, just touching back onto where it's at, 32.50 on March, 32.30 the low, 32.79 being the high. So the gold silver ratio continues to climb here, goes up to about 91:1. So getting back into some not unprecedented levels, because I remember when it was like 120:1, and that was a much different time here over a decade ago. But we do see gold futures continuing to kind of hold these higher levels, because if you get the rising inflation, you get the declining growth, you get the stagflation, which is one of the best environments that it operates in. Now, if you get the declining growth and then you start to get the breakdown a bit in the economy, that's when you're going to start to see some deflation come in, and then that will create some optimism about when the Fed is going to make its first interest rate cut, and people will come in and they'll want to front that. So gold's kind of working as two different horses in the horse race here. It's also got a boost from lower treasury yield. So you go to the 10-year treasury yield, the high was about 4.8%. Right now we're trading at about 4.34%. So we're really coming off here, and it follows that softer US business print on the activity here last week. So investors are really going to wait. Couple things here. We have consumer confidence coming out later today. I don't think it's going to move the market, move the needle too much, unless you get a really big week or really big boost in the reading. You're going to have a couple Fed speakers. You'll have an Apple shareholder meeting, but really to get the equities turned around, it's going to be the NVIDIA earnings that come out. And then, of course, it's going to be that core PCE data that comes out later on the week, and that I think will really dictate the trajectory of the Fed is going to take in the way that they're going to trade these markets. So if you look at some of the systems that I'm pretty active monitoring here, it is at a neutral stance on the S&P 500. Would need to break down below 59.67 on a closing basis to take something more of a short. On the NASDAQ, it's 21,158. Would need to close below there really to trigger this bearish sell-off here. You get into that gold market. Gold's still kind of hanging out here. 28.70 is kind of the line in the sand, and that would just take it more into this neutral. And remember, gold was in about $150 range there in that neutral trading range for quite a while. And you get to the silver market, 31.88, old resistance, new support, new kind of line in the sand. You break below that, it's going to be the 50-day average at 31.41. And then platinum's another one that's just kind of hanging in here at the bottom of the range on this neutral stance. 10.26 on the upside. We're holding right around the 50-day at 9.76, and then that trend reversal point, 9.6150. So a lot of just sourness in this market here at the moment. You are seeing the euro rise a bit. It's putting a little bit of pressure on the dollar, a little bit of pressure with that hard stance on China and the Australian dollar. Canadian dollar having some problems. Also the Mexican peso with the two tariffs that look to be implemented here next week. So you got any questions, you give me a call, 312-858-7303. Remember, futures and option trading, it does involve risk of loss. May not be suitable to all investors. Good luck, good trading.